Hello, I'm Richard Mize, real estate editor for the Oklahoman and newsok.com, talking with Craig Tucker, who's managing broker and an office specialist with Price Edwards & Company, big commercial real estate firm here in downtown Oklahoma City. Their year-end office market summary has just come out for 2015, and so let's just get right after it. What in the world did y'all do with First National Center? It's not here.
Well, hopefully we've sold it, but we'll find out. We're under contract, but as everybody in town knows, really, First National's been kind of in this malaise for the last 20 years or so with different ownerships. The court finally took charge of the situation to settle the dispute between some existing owners. We all kind of know that story. They're not just going to fight over the proceeds, not over who can sell it. So that allowed us to get it sold. We're under contract. Through the process, though, it's 1 million square feet.
It's off the books.
It's huge. We've taken it off the books because, frankly, for the last 2 years, you really couldn't go over there and lease office space. If you had a prospect, you'd be lucky to even get a response. So it's been this albatross around the neck, really, of the downtown market. Half the vacancy in downtown was in that building.
And so overnight, with a stroke of a pen,
we've
vacancy
eliminated
went from 20.7%, right, to what, 10.8% at the end of the year? Did it just cut it in half?
Exactly. And and through the process too, we found that not only is it 1 million square feet, that it was even more vacant than was being reported. So
yeah, that caught my attention in the report. How does that happen?
Well, you have to trust the people that are giving you the information, and the previous ownership just had not been totally accurate in some of the reports that we'd gotten. So, as it turns out, we actually had negative absorption, which seems crazy when the vacancy rate drops that much, but a lot of it's due to the inaccuracy of the reporting that we discovered through the process. So with that, the market's now only 10.5% vacant, whereas it was double that, and that may lead into your next question.
Well,
you're on the edge of your seat.
I'm an interviewer, so I'm ready to interview. But that's all taking place right here at the cusp of the what impact is oil and gas retraction going to have? And so
Sure.
kind of talk about that. It's not just statistics, it's perception and it's statistics, and it's a matter of space available, right? So
absolutely. In most cities, and particularly downtowns and office markets, are judged by downtown vacancies around the country. And if you had an over 20% vacancy rate, well, gosh, that's an unhealthy market. Well, in fact, just the opposite has been true the past several years. Class A space has been in the single digits in terms of vacancy. Rental rates are going up, but you look at the total vacancy rate, and it's over 20. It's been as high as 28% in the last 10 years, and everybody thought, well, gosh, downtown Oklahoma City is just dead. Well, half of that was in one building where you really couldn't get a lease done. So when you eliminate that from the market, you really get a truer barometer of really where the market stands today.
That's a good example of how one property
especially one of that size
can go from troubled asset to huge waves in the marketplace in general for the space around it. Correct? Yeah. Talk about what's going on in the suburbs and what might have been up around Quail Springs Office Park in that area.
Yeah, and there are still new projects being built. There are a handful. They're mostly pre-leased and well leased, or they have an anchor tenant, or they're owned by that owner-occupant. But there were several other projects on the boards that I think, for the most part, maybe not all, but many of those will get shelved, which really is going to keep us from having an oversupply of office space.
But these are energy companies, right? Building their own space, maybe with some
not necessarily.
As well?
Not necessarily.
No,
there were also developers looking at spec development, and so with oil going from 108 or whatever it was down to where we are today at 27 or whatever as we speak, those projects no longer make sense. Now, a prudent developer, if they've got the capital, may still move forward in the next 12 months because their building's not going to be online for 18 to 24 months. And we know, we've seen this before. Oil goes down, it goes back up. So they may hit it just right when they're coming back out.
Do you think more luck or prudence on not having this overhang? I mean, we don't have an overhang really out there. We have could have been, but.
No. Yes.
Yes. Luck and experience.
Yes to both, absolutely, yeah.
Let's talk about subleasing. That happens sometimes. What kinds of times does that happen, and is it happening now, and why?
Well, it happens particularly when a specific industry has a downturn, like we're seeing with oil and gas companies right now, and there is sublease space coming online. There's a lot of shadow space out there that frankly won't ever come online for sublease because companies, maybe they have their own building or whatever and they've got excess space, but they don't really want outsiders in their building for security reasons or whatever. So the market's not going to necessarily have to absorb all of that, but there is vacancy out there available for sublease. Typically, there's been good demand for it lately. It's being sublet at not a huge discount to the market. Personally, we had 20,000 feet of sublease space at a building in South Edmond, which is not in our report, but really kind of competes with the Memorial Market. And we've sublet all but 1,500 square feet of that in the last 18 months at the full rental rate. So they didn't even have to take a discount to get rid of it. So the market's still good.
Now, do you track that anecdotally or
yes,
foot to square foot to square
It's hard to put square foot to square foot because the reporting of it can be so inaccurate that we tend to just discount it. We know it's out there, kind of refer to it as shadow vacancy. It doesn't make up a significant portion of the market. I would say maybe there's another 1% out there of shadow space that maybe doesn't find its way to our report.
Now, there's another one or two what might have beens here in downtown. Do you care to talk about those a little bit? And how
sure. Well, I mean, there's a recent announcement that OG&E is not going to move ahead with their tower. I think that's prudent given where the market is. You know, they didn't get their rate increase that they were hoping for with the Corporation Commission. So it's prudent to withdraw, I think, at this point. I think in the next few years they may go full speed ahead on that. Other opportunities may present themselves to them in that same period, which could also keep a building maybe from going dark if they could acquire it.
So it seems like to me we're sitting about as pretty as we could be considering
given the circumstances.
Considering the circumstances absolutely. And the clouds that are out there and the headlines.
Yeah.
Smacked me for some of our headlines, which raise fair questions. Is it the 80s? No, and here's why, which I hope we've explained in some of our reporting. We'll continue to do that. It is the story of the year, probably.
Sure.
But we're not as in a bad shape as we might have been, partly because of the First National Center, but partly again because of these things that were on drawing boards that thankfully got
and we're just much more economically diverse than we were in the 80s. I mean, Boeing's hiring people left and right, and now they don't necessarily use downtown office space, but that's going to keep the economy, things like that, the diversification, keep the economy from tanking.
Anything to add?
I don't believe so, Richard. It's always great to talk to you.
Thank you. I'm Richard Mize, real estate editor for the Oklahoman and NewsOK.com, talking with Craig Tucker of Price Edwards and Company.